Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is the 18th and we got some housing numbers here coming up in about 7 minutes. Could be important. And yeah, also we're going to be doing the fourth of the CME Treasuries webinars, talking about practical applications, kind of a basics on treasury modeling. So excited to see the rest of that. Let's come and see the charts. Yesterday, Monday, like you said, I kind of was like a little risk adverse yesterday because it just didn't really. I mean, man, this whole thing right up in here. Look at all these tails and stuff. Like, is I mean, they did pull out a rally in the end, but it was still actually slightly down on the day. And the overnight session coming up here a little bit, but I don't know. I think these housing numbers it's not often that a housing number is important, but I think it could be really important this time around. Treasury yields increasing a little bit, so that kind of looks like they topped out yesterday in that overnight action. But for most of the day, treasuries just went nowhere, and then even in the overnight, they're kind of flat. Now over in commodities, oil taking a good jump yesterday. After we traded, doing pretty good overnight. There's still a lot of like geopolitical concerns over there, and will be for a while, of course. Gold and silver doing pretty good. It doesn't really that much change from yesterday, but I mean they're already jumping at the bit. It looks like. Same here in silver. I mean, look at this. This looks very bullish to me. What was it? It was back in February when things went all wacko crazy. They were like at 28.5. Yeah, they're above that. So gold and silver are taking off, and we're to the point where we're above 200-day moving averages and things like that. Like CTAs are jumping on, it appears. Over here in the dollar continues to just crater. But now the yields did go up a little bit, so gold and silver not going up as much as the dollar decline would suggest. And where is it coming from? It looks like it's mostly from strength in actually it was across the board. It looks like pretty much everybody benefited from the dollar going down on that one. So yeah. Early gang, says Stickball. Yeah. Good morning. Oh, let's turn on the text-to-speech thing here. It's 10:25 in the afternoon for you. Yeah, that's probably one of my things. I was just, yesterday I was feeling so frustrated. I'll probably go on a really big, huge rant about this tomorrow or later in the session. But I'm so frustrated. I'm doing all this research about like treasury modeling and some advanced statistical concepts and some real quant kinds of things. And I come on stream and people still want me to talk about RSIs and 10-minute simple moving averages. And it's just, it drives me crazy. And I'm sitting here like, why am I even bothering with this if this is what people want to come in and talk about? And why is it I go on Reddit and there's somebody else pushing another algorithmic trading system that has large stops, and everybody was going gaga over it. The people in algo trading are actually a little bit smarter, so I wasn't the only one that was like, guys, this doesn't actually work. But it's so frustrating. You turn around and you see that you do all this work and then nobody really cares. But then somebody goes and posts something that anybody could go and make, and they're getting all of this attention from it. And sometimes I'm like, well, we're early. What we do is sophisticated, I guess. We got to go back to that most people aren't going to stick around, right? Because it's just too hard. But I digress. So, but then I look there and Stickball is like, oh, it's so early. It's 10:25 in the afternoon. And I'm like, oh, yeah, that's why so many of my viewers are Europeans. It's just because they don't have to wake up early. That's what trading is about. Yeah. The consolation here is that because everybody wants to trade with a moving average and an RSI, that provides opportunities for us, right? If we have a real alpha, which yesterday was a Monday we didn't really have, unfortunately. But I knew that, and so I never went over to the serious account, so we're okay, right? See, these treasuries are bearish. I think I could just like outright sell this. Actually, no, I don't want to do it like that. It does that sometimes. That's annoying. Don't cast pearls before swine. The issue is that some of the people that I'm trying to get through to aren't swine. And I just don't know what it is that I have to say to them to get through. They don't believe that. Here's the problem, is that it's like impossible for people to admit that maybe the results that they're seeing are random or largely from the overall trend of the market. It's like we think, oh, if we made money, that's because I'm so smart. So then you can't teach them anything at that point, right? So not until people are brought low, and hey, that could be a while. Okay, so hold on, I'm gonna turn on financial juice here. I keep forgetting to do that. Okay. So we're looking for housing starts to be 1.71, permits to be 1.77. And then there's like the percentages. Okay, less than expected. Curious. Okay, well, I thought maybe there would be a reaction here. The housing permits, the housing numbers were bad. Housing starts 1569 versus 1702. It's not like the biggest miss in the world, but do it for the small percent that care, and the ones that come and go will come back if they are really serious and progress further to realize, yeah. At the same time, so it's like that's why I'm kind of been trying to separate things. So it's like, okay, so we can have the stream and the serious stuff, and that doesn't have to be popular. And if I want to have fun on YouTube and have like a successful channel, or try and build that up to the point where I can use that as supplemental income to be able to do more serious trading, that we can do that. But then it's like, what are the other, like I did stock market Steven. I put a bunch of ideas out there, but like none of it picked up traction. I haven't really posted a whole lot with him lately because I haven't had many good ideas. Well, good pearls of knowledge to those that don't want it, or they will turn it vile. Yeah, that's what happened yesterday. Good grief. Yeah, so that is a loser. They did move up, which is what we expect off of the news. I was like, at first I was surprised that like it wasn't moving. Yellen, I am confident that Biden's investment tax plans will enhance net profitability of U.S. corporations. Anyways, I think that sometimes when I do something like that, it's like, I don't know, it's so easy for like with like your hormones and stuff to go, right? I mean, I feel well, usually when I go to sleep and I wake up and I'm fine, but yesterday I was like, what am I doing? This is so pointless sometimes. And I mean, the funny thing is it's not like we haven't been making money. MicroStrategy bought another 10 million worth of Bitcoin. Well, but that's not actually very much because they bought 1 billion, right? There was this whole thing yesterday where everybody was like saying Elon Musk sold his Bitcoin, but then it turns out that he didn't. Or at least he said that he didn't sell it. But one has to wonder how long before they will. Like, I think he's thinking, I don't want to sell it because I don't want to dump it on everybody, but there may come a point where he pretty much has to, especially if Tesla continues moving down like it has been. The thing is that the big guys have been shorting, right? So the GS Prime desk says that they have had net selling for the past 2 weeks or something in tech names, and it's really quite extreme. Zero Hedge was putting that out there yesterday, kind of implying that there's a huge epic short squeeze that's about to come. But I think what's actually, I'm not so sure that that's a foregone conclusion, because I think what's happening is the rotation is finally happening. Not the rotation to value, unfortunately. If only the rotation from growth to value. No. But they're rotating from tech to financials and materials because of the concerns about the rates. Yeah. Is it you saying MicroStrategy is up 1% today pre-market? Yeah, but it was down 3% yesterday. $229 Bitcoin. But you realize though that like if MSTR was to take another, or if Bitcoin was to take another leg down, I mean, look, this action here in Bitcoin is not positive. It is not positive. And if they break like 4,240, and I'm starting to see people think that it could happen. I don't know. Normally the Bitcoin analysts are always like buy the dip, but I saw at least one guy saying 30,000, which let's go a lot more than that. But you realize that once you get below 45, that he's basically hosed, right? So what's happening? He bought all this stuff. It wasn't it created the stock was overvalued. It came back 50%, the stock. Then Bitcoin fell down, and now they're taking pain from that, and he's doubling down. He bought $10 million worth of Bitcoin when before it was $1 billion. So he's quadrupling down to try and create a headline, and the headline is weak. We'll see if it works. We'll see. I don't think it's going to work. MSTR eventually is going to go kaput. This will probably be gap closed. Well, here in a second, we'll pull up the stock some kind of look, because what happens to the tech today, I think, will be a big factor. What do you mean, who is doing well? You're talking more generally, or are you talking about today? Because more generally, everybody's doing well. I got a great idea for the next coin. It's going to be an animal farming-like game, Nintendo Switch coin. Pretty much. I'll tell you, an inefficiency in the market that I see that I unfortunately cannot arbitrage out. But somebody out there listening, maybe you work for a hardware company, you can see it, okay? Nintendo Switch costs $200. Now, I understand that they subsidize that, okay? But why isn't somebody building a PC that has comparable specs? I don't get it. Build a PC with comparable specs. A screen PC, you can connect a keyboard and mouse to it if you want to, but you don't have to, right? It'll be like one of the gamepad form factors, like the Nintendo Switch Lite. Come on. What are you waiting for? I think it's a brilliant idea. You can take advantage of those, new tiny processors and stuff, like the things they're putting in the NUCs. So Tesla, still kind of bearish. I can see where you're saying that there's like a gap fill setup, but I don't know. Why would a short want to sell that over a Switch? So you can play Minecraft? I don't know. Like, the thing is people are making them. Like, people are making these kind of handheld PC sorts of things, but they're all high end. Like, they're like $1,500. I'm like, make one that's $250. Well, here's another one we haven't talked about. Coinbase, man. Did you see that they did like an offering? They were sold dead or something like that. I'm like, what is going on over there, man? Looney at 6-year high, huh? Yep, coin had an offering. That stock, what did it start out at? 400? They're below, like, the initial IPO price, not what it started trading at, but like what they wanted, like what they said it was worth was 250, and it's below that. Like, that's ugly. Well, you know what? I think that I kind of got suckered in by like that the Treasury's underreacted to the news. Because I really, I was really, the plan was to get out. I didn't do what I was supposed to do because it was slow. I should have gotten out and gone long. Oh well. Oh well. But the E-mini is not recovering with it. So when will Tether finally blow up? Who knows? I don't know if it ever will. I'm starting to feel like, will it ever? Honestly. Hey. It's hot potato. Well, so it's only a week or two now. I don't know what the exact date is, but coming here at the end of the month is when they have to make their attestation to the New York Attorney General. They did give like a rundown of their reserves a week or so ago. That didn't really fulfill their requirements. Maybe they did. I don't know. I don't know what the point of that was, but what they shared was not confidence inspiring, right? I think you're already familiar with that one. But like actual cash, like actual liquid cash, they did not have much of. It was only like 4% of it. like if everybody that owned Tether all at once tried to redeem their Tether, they would be screwed. They would be completely screwed. So, that didn't really seem to I mean, the Bitcoin guys didn't really seem to care about that. They're like, oh, look, it's transparency. See, everything is fine. How did Bitcoin blow up? Someone from the state government filed a cease and desist. Oh, was that really what caused it? Anyways, so I'm looking at this thing, and I think what's going to happen. Is that they're going to do their attestation. I don't know if it's going to be sufficient or not, but it will basically expose Tether as a fraud. That it is a fractional reserve, and people in the crypto space won't care. Like you realize, for these people, the facts don't matter. The fact that Bitcoin has been bought up by money that literally doesn't exist doesn't matter to them. The only thing that matters to them is that they're making money. It's the same problem. It's the same problem I see at every level in trading. When people are making money, there's nothing you can do to convince them of anything. They say, I've made money by buying and holding this, and so I'm going to continue to buy and hold this thing until it stops working. And they don't listen when you come in and you say, well, that's going to change. Great daily talk. That's going to change. But more to the point, though, in Bitcoin, I think that the concerns about dropping below 40K or so are probably a lot bigger, right? 40K and then 35. There's so many big guys. The big guys that really started this run, that's where they're in at. You know what they say, money takes. Oh, I've never heard that before. Money talks. Gotcha. No, this Bitcoin, I think, based on my own metrics and the way that it tends to behave based on those metrics, and just our own reading of order flow, like paying attention to which areas it spent a lot of time at and where big announcements were made about people getting long and kind of gaming that out. This has a real potential to turn into a real unwind. That if any of these guys are forced to puke, this thing is going to just totally get totally decimated. So, but here again, like a lot of, well, and the other funny thing is that a lot of people got in between 45 and 60. A lot of people, like it looks to me like the public basically bought it and are left holding the bag right now. right? Good morning, Ace. It's just, you know, if Michael Saylor, like if MSTR goes bankrupt or something, like you imagine what that's going to do to Bitcoin price. This is going to be ugly. Well, I didn't finish. Okay, GameStop is down. A lot of the meme stocks are down, but Apple and Amazon are up. So we could have a good day in the treasury. I thought about FOMOing into Bitcoin finally after hearing about the halving, but still holding out as I don't believe tech behind it. Musk is completely right about it with regard to processing. Well, now that's the thing that's going to be really interesting to me. So one of the big issues that I think we have from a trading perspective on Bitcoin right now is that it's very difficult for us to get a handle on what a larger overall market thinks, and more importantly, like what average lay people believe, because there's no like polling or anything on that. And then you also have to factor in that average lay people just aren't informed and don't really know a whole lot about it to begin with. And we're talking about something that is quite technical. Like talking about the four major problems with Bitcoin that will prevent it from becoming a world reserve currency. That it is inefficient, it cannot handle the volume of transactions, it's deflationary, and it's not supported by a government. Those four things prevent Bitcoin from becoming what its proponents believe it will become. And Elon Musk is basically coming out, and all of the tweets that he's been sharing basically show that he now understands that. That he understands why Bitcoin itself cannot become a world reserve currency. Or even frankly the kind of position that gold holds. Although it will probably continue to be a speculative asset, right? So is Elon Musk coming out and tweeting that affecting people's public perception? Because when you go out and you read, you watch TikTok, I think it's funny. It's funny that TikTok is now like the best place to kind of get a tab on what retail traders are thinking. Okay, but when you look at TikTok, of course they're not deterred. The fact that it takes billionaire geniuses longer to recognize this than it took my dumbass is reassuring. I don't know, Uzi. So like the thing is, when he went all in on this, when he started and he said Tesla's gonna buy Bitcoin and all of this, like, did he understand this stuff? It's unclear. There's kind of three theories. One theory is that he didn't, and then after the fact he learned, and now he's souring on it. The second theory is that he did know, but he bought into it, to satisfy his own ego and mess around with the market or whatever. And the third theory is that he knew this, but he thinks that Dogecoin is the way, and so he's doing all of this to pump up Dogecoin. Those are the three theories I've seen out there. I'm not a mind reader, so I don't know. When I try and game it out, I see problems with every one of those theories, and so I just can't, for the life of me, figure out what he can possibly be thinking, or what the net effect of it is. Occam's razor, he's just pumping and dumping. I don't know. If he's pumping and dumping, I would hope that he already sold the Bitcoins, because when he sells, he's going to lose money. But it's just what I keep saying, is that these schemes, they don't work. This idea that you can buy it and then everybody else will buy it in behind you, it's not supported by the scholarly literature, nor is it in line with a large bank experience. Otherwise, that's all the banks would do. But they don't do that. Like, especially like the banks like Goldman and Morgan Stanley and JP Morgan. They don't play those games. Like, they actively avoid having to make any kind of call of that nature. And they focus their business purely on executing other people's trades and the spread. Right? I don't think that we in retail trading think about that enough. That, hey, how does Goldman Sachs make its money? The spread. There's power in the spread because you can make money off of the spread. Whereas everything else requires making some sort of a judgment call and taking on risk. So either invest a little into many cryptos that you believe the tech behind, or don't invest in it at all. You got this underlying digital culture of no negativity allowed that just makes the cryptosphere ripe for screwing over idiots. Oh man, explain this to me, Uzi. Though, why do you think? Because I get that for sure. Like, anytime that I go on Reddit or anywhere else, and I point, so like I had this yesterday. Somebody was pushing a strategy where they were taking big, they had a big stop compared to their risk, and they've been posting this all the time on Reddit now, and he's developing a little bit of a following. And somebody in the thread was like, well, you have a big stop there, my friend. So I came in and I said, it's just the same shit, guys. This is the same thing. You take this big stop, and then you run around on social media and you crow about how much money you're making and develop a following, and Reddit falls for it every fucking time. And I really mean every it's a technical term, every fucking time. All right. And so the guy came back, he responded to it, and he said, well, my subreddit is full of a whole month's worth of data. And when I read that, I was in the shower this morning. I almost slipped in the shower laughing. So, like, you got to realize with a strategy like that, what you're doing is you're increasing the kurtosis of your distribution. You're making it so that the vast majority of trades go up into, inside of the standard deviation, but you also increase the fat tails. So in order to understand how this system behaves, the more fat tailed it is, the more samples you have to have in order to see it in the distribution. And it increases exponentially. So you exponentially take risk. That means exponentially more trades are necessary to see the response of the system. So 1 month's worth of data is laughable. It is so absolutely pathetic. Like, this guy has no clue. He thinks a month's worth of data. So I said, like, look, I'm not trying to I'm not trying to be offensive here or anything, but that is laughable. Like you need to realize that you have no clue that any quant that understands even a little bit about what's going on, and understand I am like beginner level quant in my opinion, based off of a lot of the math and stuff that I've been learning about. Okay. I cannot implement this stuff yet. Okay. I am very basic level. I understand this sort of stuff. It's like, this guy just has no clue. And you get downvoted for it. You get downvoted for saying that, because that's this negativity. But then you go on Twitter, and there's all this negativity around canceling people for wrongthink and all of these things all over the place. I don't get it. Why is it that if you are negative about something that is like, you can empirically prove, that is like a factual point, and warding people away from what is, a poor strategy, something that's going to bankrupt them. Well, not bankrupt them, but, they're going to lose their investment at some point, right? That's negative. But then running around and trying to destroy somebody's life is not. Explain. That's what I don't get, Uzi. Explain that. If your broker can shut down your trading, it's not a broker, it's a middleman. Well, hate to break it to you, Ace, but that's basically what futures trading brokers are, right? The what we as retail traders typically think of as a broker as it pertains to, like, say, Robinhood is not what a futures broker is. That is the FCM. The FCM is more like Robinhood, right? The broker is there because the FCM cannot afford to give everybody support. That's basically why, and to, like, market, right? Like the FCM, they just want to focus on building their systems and managing everybody's money, and they don't want to deal with all of the stupid retail traders that don't know what they're doing, or, and trying to market it to them and everything. And so that's why they hire futures brokers. Futures brokers are essentially like the sales and support. But if my broker started junking me around, can't go short, can't trade a certain market. I mean, I've literally had the broker, I've literally had AMP take me out of positions at times. In fact, I think there was one point at which they took me out of a very profitable position. Totally happens. And they can do that. Well, I've wondered if it's just best to never negatively criticize. Well, I don't believe that. I believe that even though I get downvoted, that there's at least one person out there that reads that and goes, "Oh yeah, that's that's a problem. I don't want to pay this guy, whatever it is." And that it's worth it for somebody. And I think that it must have something to do with you know, inefficiencies in certain platforms, and that eventually one day we'll get get over that. Okay, so I'm going to be paying attention to this CME group webinar now. Retail trader brokers who have expertise in managing risks. There you go. Introducing brokers, typically the marketer. Yeah. So I may not be saying as much just because I'm taking notes from this webinar. I was expecting the Dalai Lama to say different. Look at this guy's tie, guys. Mr. Gibbs. Oh, wait, he disappeared. Oh, that's the wrong. You can't see it. He has a bow tie that's like an American flag. It's freaking boss. Not a lot of legs on those lungs. Well, the thing you got to remember, John, is just a moving average. So it keeps them in line with the market most of the time, but it doesn't predict whether the market's gonna be moving or not. Stickball. It's funny. Like anything can predict if the market is going to be moving or not. I have alphas that can predict whether the market is going to be moving or not. I think today will be better than yesterday, but I'm not so sure that it's going to be a really strong move today. Can always surprise, but the probability is lower. Oil just said to lumber, hold my beer. Oh, oil's taking a little bit of a dive right now. I can assert with 100% certainty that the market will move during public trading hours. I just cannot predict how much it will move. Well, would you say that it moved yesterday? I mean, yesterday was tough. That link that bots posted is hilarious. So he's talking about the yield curve now. Oh, look, see, it just went short. I added Robot Ace for you guys. He even takes multiple contracts. I think there's something wrong with him, though. Yeah, there's something wrong with him. Have targets at 0.5, 1, and 5. Actually, no, let's do 1, 2, and 5. And we'll set armed threshold at spot 5. Good morning, Lucas. Sorry, I might not be talking a whole lot because I'm watching the CME webinar. We're looking historical long trades into Eurobond for the next 3 weeks. The thing is the bonds have kind of been moving up generally over the past month, but a lot of that is just has to do with the mean reverting nature of bonds. The webinar is on pricing treasuries. He's talking about the yield curve now. Like DVO1, yeah, that's that type of stuff, yeah. It is recorded. So if you go to the CME website, it's a 4-part series. This is the 4th part, and they're all recorded on the CME website. If you go into education and you just look for videos. Just warning you though, it's really boring stuff. It's like how do you determine which treasury security is going to be the cheapest to deliver? That sort of a thing. Interest rates, the rocket science equivalent saying. It's a lot more numbers. It's a lot more numbers because it's basically like taking information from one treasury security and then using conversion factors to see how the other securities are priced compared to that. And then the thing that gets where it gets complicated is that there's, we just think about the treasury futures, but like there's the futures, there's the cash market, there's the repo market, there's the corporate bond market, there's like all these things like real yields. And is there a way to have access to the bonds data feed cash market, not futures, of course? Yeah, so let me show you something. So I'm sure that you're familiar with the CME group, and you come over here and you go to tools and you go to treasury analytics. So then you come in here. See, here's cheapest to deliver. Cheapest to deliver basically means this is the security that the treasury is going to react like. On the run is the most recently issued. Then I can come into the 10-year and it will tell me all of the coupons that are currently eligible for delivery for the 10-year contract and what they're doing right now. So this right here does tell you what the cash market looks like for all of these different CUSIPs, right? So then you say, well, yeah, but I don't want to refresh the page every day. Well, you right here down at the bottom is the key. You see powered by QuickStrike, bandtix.com. You can come in here. You can sign up for their tool, their QuickStrike tool, and they say try the free version, but I think you have to set up like I think that you have to pay. You have to pay a $25 trial fee, and then I don't know what happens after that. I didn't try setting it up. You should try setting it up. But then after that, I think it's $100 a month. So if you want real time, you could get it through QuickStrike for about $100 a month. Which is probably not what you wanted to hear. The free version, which costs money, right? Well, I don't. Yeah, I think that the free version is just coming in here and refreshing. I don't know. Somebody try doing the registration and doing it for a month and then tell me what happens, because I don't remember the specifics, but when I looked at it, I was hesitant to do it. Yeah, $100 a month if you're trading size in bonds and can get an edge of what the underlying market is doing is really nothing. Yeah. Well, the issue is that I see is that I don't believe that you can use that information and just straight arbitrage it as a retail. I mean, like what you could do is you could see the cash market and the futures market are different and buy and sell the one and the other, but you would have to be able to actually buy the cash market thing. So you'd have to have like $100,000, right? But what you can do is you can look in and see that there's a difference, that the basis, they call it basis trading. So there can be like the basis between them can change, and you can take a trade on on expectation that it mean reverts. But you probably don't need live data to do that. You can probably just use that Treasury Analytics tool. No, I want the bank to work for me. Don't bother with it unless you want to work at a bank. I don't know. I'm kind of been thinking that I want to understand all of these treasury models and then go and work for a bank again. Seems like some of the fun things that I want to do, I would be make more sense to just work for a bank. As a bond trader specifically, I know because I've went down that rabbit hole myself. Did you work for a bank? or are you just saying you tried doing all of that stuff in treasuries and you couldn't find an actionable edge because the banks were already arbitraging it away? Well, the yields are coming back down. Um, this webinar that you linked me to is not the webinar that they're doing right now. No. This is the first one. Oops. Right here. Oh, really? Invoice swap spread. I always get negatives of wisdom when I come around here. Yeah, thanks. Well, we're always learning. How do you organize yourself and set goals if you have ADHD? Um, I don't know. I'll have to answer that after the webinar. Taking Adderall helps. And always anything that you can't deal with, that your brain has a hard time dealing with, you need to externalize. So you put it into your phone with alarms, or you write it down, or you have a spouse help you. Like, they're doing this webinar and they're talking about invoice spreads, and there's a lot of stuff in here that you realize the primary audience for this is somebody at a firm that's going to be trading treasuries, and not retail traders that want to do market making in treasuries. Because where are you going to get the data from? Hmm. Looks like they still will maybe want to buy it there, but it's a little disagreement in the treasury right now. Oh, wow. So some of this stuff about swaps and IRS rates is kind of like, I don't know how I can incorporate that. But when you look at the amount of volume that's coming through because of that, it is not insignificant. Okay, here's the open. Hmm. So initial move is a buy, but it's very, very small. Very tepid compared to days past. It looks like a bearish open. If we start seeing a bear market for the next few months, makes me wonder if the exuberance has caused markets to lag reality instead of lead. The way that I would read it is markets tend to underreact at first and overreact in the long run. Ergo, they underreacted to the economic recovery, and now that everything has been fully priced in because it's actually happening and we're recovering, they've overreacted, and so they have to come back to value, and that value could be a little ugly. Yeah, that turned down pretty hard. A little bit of dip buying here, but it's not super strong. Okay. There's some things about this action that kind of reminds me of yesterday. We had a big sell, we bought back up. I would expect us to break the high. It's a little tepid. The amount isn't a ton. could be canceled back out again. Like they could break the high and then go and break the low again. Hmm. You fine. I'll read your comments after we're done. Hmm. Hmm. Okay. Hmm. Too slow. Selling again. Seems like there's a little bit of buy pressure in the 30-year here for some reason. They may be reacting to the bearishness in the E-mini. Hmm. Treasury's getting thick there. Okay. Hmm. They did not like the treasury ticking down there like that. Hmm. It seems like that the equities don't like that the yield is increasing right now, but they're they're dealing with it at the same time. When they start coming up though, it gets smacked down. You see how those when those pushes down come, they're quite quick. Hmm. Some of these big orders in the E-mini are disappearing before they trade too. Hmm. Of course. Of course. See how they're manipulating the order book in the 10-year? It's like then all of a sudden the big stack shows back up and pushes it up. It's okay, I was able to scratch it. Probably not a lot of people actively trading this action, just like you weren't. Yeah. We're a little mad about the way that treasury trade worked out because it didn't get filled as when I should have, and they traded so much at 08, and then but because it didn't take it. Anyways, I was just a little slow. I should have just hit into it. I had the right idea, and then, I waited out after missing it and got screwed over. So that was a mistake. Uh-huh. Hmm. And I'm just noticing the overall commodities complex is just rolling over right now. Oil is down. Corn is holding okay. Soybeans down. Copper down. Silver down. Gold down. I'm not seeing the dollar move. The E-mini is moving down. Yields are increasing. But the change in the treasury isn't extreme, and the movement in the E-mini isn't that frantic either. I mean, it's down, but it's relatively calm. Okay. Not even testing yesterday's low on ES going to be a slow day without some spicy news. Well, yeah, so I don't really see a whole lot, nothing coming in on the news squawk or anything like that. Let me get this out of the way here. Like I said, the overall delta is bearish, and it is like what? So we're good, maybe 12,000 contracts down. But when you look at the pace of the tape, it's not like it was on those really bad sell days, or like they seem relatively constrained. One thing I am noticing is that when we're pushing down, there is some bearishness in the treasuries, but it's a little weird because it's like it's one tick versus before it was like we had to go several ticks before the E-mini was reacting to it, right? And the other issue is that I guess we are seeing the dollar move up a little bit, but it's within the range, right? But the biggest thing that I'm seeing that I find curious is just like a broad commodities sell-off. So like I'm seeing a lot of things in line with fears over rising rates, but I'm not getting, the correlations are all kind of in line, but the magnitude just doesn't seem to be there. Bank of England's Governor Bailey is speaking at the moment, by the way. One other thing that we should take note of that I think is very important is that the treasuries are thickening up. So there is definitely some market, somebody coming in and doing something in treasuries, although it's unclear what exactly. They've shown up since we've been down here around the 08 half area. We have seen some movement down, but they didn't really push it. So, anyways, that webinar was interesting because they did bring up a couple of other things that people use to how they use the treasuries to manage risk and so forth. I think you're going to need to watch that again and review it a little bit more. There's a lot of stuff in there where it's like you really got to write it down and do your worksheet and all that. Like I need to make myself some homework for it. Okay, so we did get a 4-point bounce and a little bit of a pivot on a 1-minute chart, but it hasn't come up yet. I am surprised that Robot Ace didn't take that long there. I suppose Robot Ace is saying that that's just not enough. Thailand may release 50K prisoners to stem COVID-19 evictions amid inmates. That was the one that I did not get, is that they release people from prison. Does that like change? They bring them all back? How does that work? That was one that when I started seeing that, I was like, I do not understand. Well, one thing I should note on the silver and gold thing is that even though silver and gold are pushing down, they're just like coming back to support levels. They're still up from overnight. Gold gains as dollar gives up 2021 gains near lowest since 2014, says Zero Hedge. What am I missing? Because I'm not really seeing that. Like, they must just be talking about like the overnight action. Another thing that's curious is that off of the news, they did have a move up in the treasuries, but now they're on the pressure on the downside. And there's more interest in the book as it's been going down. So what's with that, right? I should recenter it. Dave Portnoy made it on TV. Oh man, did you guys see this? So Dave Portnoy basically decided that he was going to buy SafeMoon and then pump it. And it, as soon as he tweeted about it, like it did go up. And then he's like, he's already buying another shitcoin and he'll reveal what it is later. It's just, man. Hey Dave, go pump Garlic Coin for me if you could. I would appreciate that. Thank you. Thank you in advance. Well, the E-mini is making a little bit of a recovery. It's a lot slower than it was. It's a lot slower than it was. So you see what I'm talking about? It's like I've got it. If I was at the front of the queue, I would be getting this every time. Man. You can even see, because I'll do like a stop, you know? I'll do a volume stop. And even with the volume stop, when I go in, I'll be like 1,000th in line. So that's like how much the latency makes a difference. So SEC when? No, I don't think that if you're doing it with cryptocurrencies, I don't know if there's anything they can do about it, to be honest with you. And like, here's the thing is that like, you can go and buy something and then turn around and say, hey, I bought this thing. That's not against the rules. It's manipulative, but I don't think that that's against the SEC's rules. That's what's so messed up about it. Right. The rules are more about that if you're sharing something that is materially incorrect, you know. So for instance, if Dave Portnoy had already had a SafeMoon position for weeks and weeks and weeks, and then as soon as he announced this that he had bought it, he's set directly selling into it, then yeah, the SEC could hit him. Because he's saying something that is misleading. He's leading you to the impression that he just bought it, when the reality is he's been long it for a long time and he's using you to get out. And as he's telling you all to buy it, he's selling it. So frustrating. Okay, well, that time the E-mini turned a little bit more positive. And the treasuries ticked down and they didn't seem to care. Man, it's like a 1 or 2 ticks down in the treasuries, and the silver and gold are getting creamed. He's using the Sykes trading method. Which is what I'm thinking of the Michael Berry Tesla short news, actually. Well, now that one's interesting because he's very much Michael Berry, as from my understanding, is very much in the money on that trade, right? So people were saying like, oh well, all the retail traders will come for him, but it's like you got two compounding factors here. One, he's already made a ton of money on it. Two, it looks like a lot of Tesla fanboys are souring on him because of the cryptocurrency thing. Super crazy. Like, who would have thought that Elon Musk would pop the bubble, you know? So there was a reasonable amount of absorption you can set at 08.5. Okay, so oh, that's right. There was a little one up there. He reported he got short Q1. Felt like the kind of thing you say when you want new sellers to cover. Well, no, I don't think that he wanted to admit it. It was just it was out in the filings. Like the positions for all of the different funds have to be reported and made public yesterday, and that's why it was put out. So he wasn't putting that out on purpose. And Peter says he's been short Tesla for a while. That's true. He said that he was shorting them a long time ago, right? Nope. Nope. I don't know what it is about this particular situation that I keep ending up in that, but I seem to be misreading it in the treasury, in the 10-year. Barry has been quiet for a long time. Yeah, well, he like left Twitter, and yeah, I get it. I think we're running into a real issue where it's like we're chasing all critical thought out of discourse. Which just doesn't make any sense to me at all, because to me that was always what the internet was about, you know? Look at that. On nothing. Fuck that. He tweeted in the SEC beta. I don't know. I don't know. I'm not so sure that I can really do what I'm trying to do in treasuries. Like I was able to do it one day, and so that gave us a little bit of excitement around it. But since then, it's either been bad or a wash. There's just too much issue with the queue. I think if it wasn't for the queue, I would probably be making money on every single one of those. But it seems like far too often when I'm taking that, they go through it, and that they can't be a mistake. Which is so weird, because then if I try and take it as she goes, then it doesn't continue through. You know, it's almost like it's watching you. Which I don't understand. Because there's no way that it could be that common. It could just be really bad luck, but I don't know. And then things over in the E-mini continue to work, but it's like, yeah, but it's random. Like, you just buy it over there. You just have to buy it, and it works out eventually. Now, Chernobyl is showing signs of a possible new nuclear accident. What? See, so like right there, could we just buy into 10? Probably not. The 30 year seems to be dragging them up, though. Dragging them up to some extent. I'm not gonna try it. So why didn't that say that it was filled? Okay. But so they got filled, but then like 21 stacked on it. So that's not what you would want as a fill. Can you try and scratch it out at this point? I don't think so. You could just puke. See, they all ticked up.
Winston's mom says good morning. Late start here, so let me catch up. Please hit the like button. There are MUX available traders gonna trade. Jota and other elite indicator package and hello all.
So then it ticked down. Only 500 stacked. Nothing went into 09.5. Should have scratched. I was about to click. I was like, after that, I was gonna be like, okay, let's get out. Nope. They stacked 3600 on it. And then he pulls it. That's bullshit. It shouldn't be able to pull 300 lots just willy-nilly like that. I just don't. I can't even. Scientists are warning another explosion could occur in Chernobyl due to the spike in neutron numbers in an underground room called 305-2. The numbers may indicate that new fission reactions are taking place, and there's a possibility that the smoldering nuclear reaction in a room that's currently unreachable could lead to an explosion, Business Insider reports. Curious. I don't know. They have like that sarcophagus around it. So, but probably they're too far from getting to where they clean out that room for that to. I think another problem that I'm having here in treasuries is that I don't really like it was okay. We know why it went up the first time. Why did they go down to the lows? Why did they press the lows the way that they are? And why are they reverting the way that they are here? Is it just random, or is there a piece of news out there that I don't know? The way that they pull out through some of those prices kind of suggests informed trading. So then I'm coming over here, I'm looking like currencies didn't really do anything. I don't know where it comes from. The E-mini's doing well. And that's the other thing is there's like correlations. So, or rather, if there is a correlation, it's between interest rates and the ES. Like when treasuries go up, the E-mini goes up and vice versa. Well, that it's been that long and it hasn't stopped me out is, interesting, but I don't think that it's going to go and fill that. But we'll see. Hmm. Cool. Oh, look, now they own 9.5 balls. Yeah. I would have gotten it, but I scratched it because there was an iceberg there. So again, it's probably just random. The 30-year really dragged him down, though. Here comes the E-mini back to the open. Will we see those aggressive sellers come back in there? By the way, like there was when this sell happened down here at 41.50, like at the lows, like that was pretty aggressive, and then ever since then it's been up. So it could have just been a large meta order selling, and now it's done. So like I see the possibility for an opportunity here. Will the 09 clear? This is going to be really interesting to me. What will happen if we break 41.64 here before, because the pretty aggressive sell on the open and now completely retraced it and then some on hardly any volume. Feel like it's going to be like this until another Fed talk. Well, I think there's some other things going on that are creating opportunity, right? So in the treasuries is difficult. I just have to admit that, like, I used to trade the treasuries a lot and I did okay in some instances. And ever since the pandemic, when everything gets really tight and they're so stingy and there's so many games in the book and stuff, like trying to get one tick is just kind of like ridiculous sometimes. And it just doesn't move very often. And then when it does, there's already a lot of kurtosis in the distribution of treasuries, right? So, and I feel like that the pandemic has just made it worse. Like it's even more mean reverting than it used to be. So, I don't know. But over here in the E-mini, I think there's a couple of things about positionings and rotations that you could play off of, right? Like the tech sell-off is a big one. So we should come in here and look. So how are we doing here on like Apple and Amazon? I'll sell. Also down on the day, Tesla down 3%, ARK down 3%, Coinbase down 3%. It's like all of those big moves that all the retail traders were getting into a couple of weeks ago when we said that things were just really excessive are getting demolished. Freeport McMoran up 1%. AMC is actually doing okay, which is interesting. And the banks are doing okay. So I should come in here and check on. I'll do it over here. Not bad, not bad. GS was up, but it's down from overnight a little bit, so just a small little gain for today. Barons get ready for 178 billion of selling ahead of the capital gains tax hike. Suffer that it hasn't passed and probably isn't going to pass. So that one's right there. You could take it as she goes. You'd have a lot to answer for. It's kind of in a bad spot in the profile. If it were to work, though, I bet you that'd be really positive for equities. Here's the other issue, is that if there's anything that's correlated right now, is that the treasuries in the E-mini are, right? We've moved up, E-mini's moved up. So in that case, why would you do it in the treasuries and not in the E-mini? I say that when you get seeing that, you want to, if they're going up, you buy the E-mini, and when they're going down, you sell the treasury. Frontier, good morning. How are you? Picking up a couple more viewers this morning. Good morning, everybody. So they came right up to the open and kind of shied away from it. Little bit of profit taking there for sure. Ranged market, as he said yesterday. Yeah, I don't know. So yesterday was really choppy, was the thing. Like when you come in and you look at yesterday on a 5-minute chart, it's just a complete mess, man. Look at this. Come in here and look at this. You gotta zoom in on it. Otherwise, it just looks like noise. But okay, so here's today. Here's today. Now we come back and go further. Yesterday. Look at all these wicks. It's like this hairy mess of who knows what the hell that is, right? What we got today was a little bit different. Because today we had a very clearly some sort of large sell meta order that ended here, and then the market's completely, backed off. Now, when you get a meta order like that, after the meta order is done, you are going to see a short-term regime change, but it's not like that. Not like that. And it could be like they ended it at like the top of the hour, so it could be like this again until like 8:45. Then we see. This is also kind of like the reversal time period from here from 8:15 to 8:30. So I guess that's positive for a reversal on the day. But so it's possible that another sell order comes in, but I've never seen it happen like that. So I'm going to go out on a limb here and say that there was a large sell program that was hedging down in here, and that he's done, and that if we are to break the highs, which are very much within reach at the moment, that there will be a lot of people that went along with the meta order and were selling and are going to get stopped out here into the highs. but it's probably not too extreme because I do think that overall the market is trying to buy the dip. So what happened today is a little bit different. Today there was some sort of activity. It doesn't appear to have been off of any kind of direct catalyst, but it could be just rebalancing and so forth, right? This could be a large program out there was selling to get rid of their techs so that they can buy things that are more linked to increasing yields, right? So over here in the E-mini, I do think that there's going to be some opportunities, but certainly I would agree also that the movement in the E-mini is likely to be more constrained going into the end of this month and then through the summer. Spot Gamma says, contrary to yesterday, it's bullish options flow in Tesla today. You can see the price accelerate at the top as the option flow comes in on the bottom. $600 remains the key strike into Friday. Are they using Bookmap to show that? I don't know. That just looks like volume. Yeah, I don't know. It's a relative low volume in ES, so maybe this week everyone is marching them. Well, no. It's just there's less economic news in the later half of the month, and this is the time period where things slow down. Like once June starts, you're in full-on summer mode, and the price action is just straight up different. There's just way less volatility and volume typically through the summer, unless something's going on. I mean, and then it can be like way worse. But the summer tends to be a time period that behaves different from the rest of the year. Right? I really break it down into thirds. So you got like the beginning of the year, you got the summer, and you got the end of the year. Beginning of the year tends to be good trading. Summer tends to be awful. End of the year kind of depends. End of the year, you can make a lot of money, but it seems to be more tricky. So all the treasuries another tick up, but the ZB2 ticks up. It's like the spread isn't changing, but the ZB seems to be leading when it moves. It's really weird. The Christmas run, yeah. I think there's some. So one of the things I've mentioned this the past couple of days, but one of the things is that when you're talking about futures, like what are the advantages of futures? Well, you get leverage. Well, and E-mini futures in particular. You get leverage, you can go long or short really quickly, you can set your risk really, really well. Okay. Well, what has been the major metagame in the markets lately? You buy the S&P 500 on the dip and you go long, right? And it just keeps going and going and going and going and going. So in that kind of a situation, is futures the best way to play that kind of a thing? Well, if you want leverage, I guess, but hey, you could just go and buy SPY calls, right? It doesn't really make sense to put a ton of money into the futures right now, because where is it going to be advantageous when the market's moving around a lot, when there's like a lot of mispricings that you can identify, or when the market is selling? Because it's very difficult to make money shorting with your typical stocks, right? So at the moment, it doesn't really make a whole lot of sense to be putting a lot of money to work in the E-mini, unless it's selling. That's why every time that it sells, you come in and you watch the volume in the E-mini, and all of a sudden it's like, oh my gosh, what the hell? Colonial Pipeline shippers say the comm system is down. Oh, that's not a positive thing. They're having a pretty good little pullback off of the attempt to break the open. We'll see if they push higher or if they're done. I don't know. The tape is quiet, isn't really telling me a whole lot right now. Okay. On this move down, we are seeing some increasing negative delta. And it's a strong buy there. And get back up through there, though. Okay. So you're getting a good little run, but they're not going past the point at which the market will really care. Been doing one contract and keeping it at 1 point a day from RSI. But what is your stop? Is your stop 1 point? Okay, so that was it right there. That was the pivot. So we'll see how far they get now. For it to be like a pivot on the 5-minute chart, they'd have to break 60. So 180. Yeah, your stop is, well, it sounds like your profit is 4 ticks away and your stop is more than 4 ticks away, right? You gotta be careful with win rates, because what happens is people don't tell you their risk reward, and then the win rate is useless. So if a 60% win rate, if it was equal risk reward, is okay, pretty good. I wouldn't say optimal, but pretty good. But if it's the skewed risk reward, and given that you're doing 60%, if it was like completely random, probably your stop is 8 ticks away, right? So then this is what we were talking about earlier, is that because your risk is more than your reward, you're creating more kurtosis in their distribution. Means that you're going to win more, but when you have losses, they're going to be larger. So it means it takes a lot longer for you to see the expectancy of the system. You won't see it until you run into a crazy drawdown. Tried 1-to-1, but it was pretty bad. Yeah, so what you're doing, I would be really careful about what you're doing. I'm not saying that a system like that can't work, but one, they're usually not what is the word that I'm looking for? Appropriate. Okay. So it's not like a system like that can't work, but it's usually not appropriate for retail traders. And you want to have a lot of research behind it. So if you're doing, so like you're saying you're using RSI, right? That sounds to me like what's happening. No offense. Like I hate, you have to understand, I was arguing about this, complaining about this earlier, okay? I get into this situation all the time, and I have a very difficult time convincing people, okay? Because they say, oh, it's working, and they don't understand the problems, and they don't listen to me. And then when I tell them that, it's like, you're doing a strategy that's kind of got some problems and is a little naive, they just take it as an insult and they don't want to listen. I know one drawdown would be pretty fatal. Yeah, gotcha. So here's the thing about fat tails that you got to remember, is that the fatter the tails, the more data points that you will need to be able to see the full performance of the system, right? Why? Because the fat tails become more and more rare, but they're still there, right? And in this particular case, the fat tail that we're talking about is a fat tail on drawdown or number of losers in a row, right? So you would think, given the system and given that you're winning 60% of the time, having X number of losers in a row, pretty unlikely. But because of the way that markets function and everything, it's actually more likely than is probably just the random probabilities, right? So if you're going to run a strategy like that, what you have to do is you have to see it, you have to like do a back test. Like you want to automate it and do a back test over a very, very long period of time. And I'm talking like 4 years or more. And then during that whole setup, you should see, in fact, I think I can give you an example. Oh, where is it? It's going to be like way far back, probably. Damn it. It's not there. I don't have it. Oh, 10-minute warning. Good, thank you. I totally lost track of time. Well, I don't have it. I thought I took a picture of it and saved it somewhere, but it's not there. Okay, so what you'll want to see is this. You're going to see, like, generally your equity curve is going to be pretty good, right? But if it's a strategy like that, what you'll probably get is like, and maybe it was over the pandemic. One of the good things is we've got this pandemic. You can test it over really easily, but you're going to see a drawdown. You're going to see a period where there's like volatility and it just like screws with the strategy. And you should be able to see like what that drawdown was and then see that we're fine afterwards, right? And that's over like a 4-year period with the risk reward that you're putting on. That's just from what I've found how much you need to look at to know how it's actually going to perform, right? So, otherwise do equal risk reward. And another issue that you should look at is what is the average oscillation of the market, right? Because average swing right now in the S&P 500 is more like 12 to 16 ticks, right? That means that if you take a trade and you make 32 ticks, which is often what I will go for, then you caught something more than just the random noise of the market, right? You might be lucky, but if you're like 16 ticks, or let's say 32 tick stop, 32 tick profit, and you're getting a higher than 45% win rate, there's alpha to that. It might not be enough to overcome the costs, but there's alpha to that, right? Whereas if it's 8, what you're really catching is just like the natural noise of the market, right? So it's very easy to come in and say, have a stop that is larger than that noise, so larger than 16 ticks, and be catching, 8 ticks of the noise. It's kind of how it works. So, but I think personally, if you're going to do a strategy like that, where, like Jay here, he hasn't taken any. He hasn't taken any, unfortunately, or not. He's not in one right now, but I got these two robots. They're trading up against each other, but it looks like the Jay that's the good one is working. He takes really small profits. He has a wide stop, but he has something that appears to demonstrate alpha. There's problems with it because you got to get you have to have good latency, apparently. So even the latency between running it in backtest and running it in sim seems to be a problem with this particular strategy. But you can see here, this one. This is one where maybe it was okay. But here we're still running him. We've been running him since the beginning of the year, and we kind of been working on him. And now we're kind of in a more serious testing phase. We'll see how he does. But I'm going to need to run him for a couple of months before I feel confident to see that he actually behaves the way that the backtest does. And then this backtest, we have shown that, yeah, there are some big drawdowns on it, but we know what causes those drawdowns, and we know when to just turn the strategy off. So if we got a spike in the VIX, I just turn it off. Should I learn ladder? So there are a lot of market inefficiencies in the order book that when you really get into things, I feel you want to know. Unfortunately, I don't think that if you just learn the way that the ladder works, that's going to be enough to make you profitable. It seems like I trade that and it works, but I mean, that's only been as of late. And what do you know? Yeah, you just got to buy it, right? But you get okay spots. I bought this one at the low, basically the low today, right? Well, where did I start? 41.50. I bought this at 41.50. I think that's a pretty darn good entry. I did have one. Let's just pull it over here and filter out the treasury trades. I did have 2 trades buying the dip. Also note on this one on the open, I took it. So this one I got out because it went 12 ticks in my favor and then came back, and I wasn't happy about that. But this one worked out okay and I got out. Then I switched accounts and I said, okay, we'll do these ones. 2 losers. But then that one, I caught the spot. So was it random? I personally, I think that there's a lot of luck to that. But I'm doing that mostly by reading the book and all of the other stuff that I'm telling you about. Like, I know what the situation is, so I can kind of look at the order flow and I can try and use my understanding of the order flow to try and identify what kind of orders are coming through. To say, oh, there was definitely some sort of large sell meta order, but it appears to be gone now. Now what's happening is we're up at the highs and they're still selling up above the open. But How do I buy this? When you're talking about market data, you know, whether it's the order book, level 2, volume, changes in price, time series data, from everything that I've been able to see, the ability to predict what the future result is going to be from that time series data, it's not there. They're not linked. They're independent. Most the time periods tend to be independent from each other. So the market will get stuck in a mode, you know, like we'll say that today is a range bound day or whatever the deal is. You get stuck in a mode. That doesn't mean that tomorrow's going to be a buy. Just we have no clue, right? But there are other things, for instance, news, how the market tends to behave off of a piece of news. Large meta orders, how the market tends to behave off of large meta orders. If we can identify those large meta orders and we know why, that's a big part of why it's important to know what's going on, right? So that you can say, well, this large meta order sell is probably X. Matters. And especially pricing differences between other instruments. That's why we have like all of these different instruments up, even though I might not trade off of them, because I want to see, okay, if the treasuries ticked down, they all ticked down, but the 30-year has not ticked down as much. The 30-year is, for some reason, up one tick from the other ones over and over again. Right? Those are things that have edge. Now, this edge in particular, the spreads, that's really hard for a retail trader to take advantage. The market's pretty efficient with that. But some of these other things you can take advantage of. You just have to know when, which is hard, but that's the game. All right, it is time for me to go. Market starts another hard sell and recovery. That's what today's thing is. I got to get going. I'll see you guys tomorrow.